Hello traders. So this week we have a green candle in the weekly time frame chart, a week of a pullback, especially after 2 weeks of consecutive selling. Before a couple of weeks, I think the sell-off started near 25,140, 150, and from there we did come down till 24,412, and again we have been able to give a pullback. Now, before I start the video, just would to share one small thing that in my entire list of sectoral indices, I have added two new indices, one of which is the consumer durables, this one over here, and then other one is the Nifty India Defense. So I'll be also analyzing these two sectoral indices from now on in this video. All right. So if I look at the monthly time frame chart, which is on the rightmost side, I think the monthly time frame chart is absolutely fine. The trend is up. Momentum is missing, but things are still okay. There is nothing wrong. Weekly time frame chart, we can see that we do have a sell-off over here. After the sell-off, we have a sort of a consolidation going on. Yes, we do have a small pullback, but we also have a small wick on the upside in that candle. So more or less in extreme short term, if we would say we are consolidating. Now in the daily time frame chart, the trend is down, but the state of trend is flat. Now, if you would ask me what is the difference between trend and state of trend? Well, see, trend means whether the trend is up or down, that's it. State of trend means overall in the last few days, how the market has been behaving. So I think predominantly the market has been choppy, it has been range bound. You can see candles like inverted hammer, suddenly a bullish candle, suddenly a bearish candle here, and suddenly a bullish candle which is a hammer. So this is a state of trend which is extremely sideways, choppy, range bound. But to get a little bit of clarity for short term, people who are trading at most short term, I think 24,533, 24,553, this is a decent short term level below which if Nifty starts to trade, sustains below that, then short term weakness is possible. And if we want any sort of short term bounce, short term bullishness, then Nifty needs to surpass 25,012 and 55. I repeat my words, it needs to sustain. If you just touch the level, come back, it's not going to work. All right. But I'm repeating, it's just for short term. For higher time frame bullishness, the levels, the analysis will be different, which is not important as of now because overall markets are choppy and range bound. Bank Nifty also, my friends, the monthly time frame is fine. The weekly time frame is preliminary bearish. We have been trading below this important support band, which is 54,436 to 53,891. Yes, we have a candle which has closed above the support band, but the displacement of moving averages is bearish. Now, we need to understand one thing over here in the Bank Nifty chart, that this is an important level, as this is a 53,654 is a short-term support, and this recent low is also a short-term support, okay, which is close to 53,546 and 53,474. You can see there is a sort of positive divergence over here. I'll just convert this chart into a line chart. So we do have a positive divergence between the price and the RSI. So yes, there is a decent chance of a short-term pullback. In case if there is any overnight weakness, which we'll come to know tomorrow, and we start trading below this low, which is 53,475, and sustain below it, close below it, then again some sort of bearishness could be visible in the Bank Nifty chart. Because the reason is basically, the support, the major support in the Bank Nifty chart is now at 52,757, and this particular support is a short-term support. It's not a very big support. Private banking pack. Private banking pack, now we need to be a little bit more vigilant. I'll try to pay more attention on the weekly and the daily time frame chart over here. Now, if you look at the weekly time frame chart, we can see the price has corrected and the trend is down, but the support at which we are trading is very, very strong. First of all, it is a 50% retracement, which has been coexisting with this previous high and this previous high. I'm not saying that this is a bottom and from here we'll have a bounce, but this particular support does certainly have the power to, stop selling for at least short term. And we can see initial signs of that where a couple of green candles are visible and a hammer, but we'll need more sign coming up in the next week so that we can understand that we may have a pullback in the private banking space. PSU banking space, in the monthly time frame chart, things are much better. In the weekly time frame chart, things are okay. In fact, it is outperforming the private banking space. And in the daily time frame chart, things are pretty much choppy. Only thing which I do not like over here is that we have made a lower high. And here we have made a lower low. So this is not a good sign. But as far as this low we are holding, I think things are okay. Once we start trading below 6,700, sustain below it, close below it, and then I think things will get a little bit more problematic for the bullish traders. Energy pack. Energy pack, I think the monthly time frame chart is also bearish. The weekly time frame chart is also not that great. It is looking weak. And the daily time frame chart is also bearish. It is certainly not bullish. It did have a good candle over here, then a bullish candle, but again it's not able to sustain at upper levels. Probably it could consolidate a few more days, but things are not looking that great. Auto pack, one of the most outperforming sectors recently in the entire sectoral analysis list. And if you have been a consistent watcher of my weekly sectoral analysis videos, this is basically a range breakout. And I was emphasizing on the bullishness of the auto pack probably a few weeks back, and it has played out well. Well, now it is a trend time when the trend is strong on the upside despite the market looking weak. And it's a time where you need to trail your stop losses on the upside pretty aggressively. So in case if there is any dip, you can lock in your profits and make an exit in the market. Now, Nifty consumer durables. Now, this is one sector which I've recently added to my kitty of sectoral indices. You can see that the monthly time frame chart is bullish. Weekly is also super bullish. Yes, we do have a gap over here. That is what we need to be watchful about, and weekly gaps can act as a resistance. Already we can see some initial signs of small profit booking. So I think again, as a short-term trader, one should keep trailing their stop losses. Overall view continues to remain bullish, but trailing stop loss is very, very important. Consumption pack. Consumption pack, I would not say much. Bullish in all the three time frames. Momentum is good. Trend is good even in the weekly time frame charts. Only thing is we have a wick over here, and probably that is due to this couple of days trading session, which is Thursday and Friday. So again, same thing. Trend is pretty strong. Momentum is pretty strong, and it's time to trail your stops and be watchful on the price. Finance pack. Finance pack, I think the monthly time frame chart has started to lose its momentum slowly and steadily. Weekly time frame charts, if you check, then it is trading just at a support, which is an important support at 25,580. The next important support is at 25,026. This is the first thing. Now, if you watch at the daily time frame chart over here, the RSI has hit at 30 and the price has started bouncing back. Now what we need to do is first we need to find out the important resistance level. So I guess this one, I'll mark this zone for you. This is an important zone. That is why I'm putting it up in the red color. Okay. So probably between 26,164 and 26,325, we are going to hit an important resistance band. How finance pack behaves here is going to be important. If it bounces back and starts a new sell-off, then things are not good. But if it closes above it, keeps on going higher, then things might improve in the finance pack. FMCG. FMCG, I will straight away go to the daily time frame chart. Actually, it looks like a cup and saucer bottom. I don't trade generally in patterns, but yes, this one looks like one. And in case if we have a breakout, in case you will have to check actually in the stocks, in the heavyweight stocks of FMCG, in case if we have a breakout over here, in case, so far we don't have it, you will need to see the volumes. In case if there's a spurt in volumes and spurt in the price, then this will confirm as a cup and saucer bottom. And one more thing is that despite positive announcement by the government about the reduction of GST, the sector has not been able to give a closing basis breakout. It did open higher, but came down. So this is due to probably one or two heavyweight stocks in the FMCG pack, but I would certainly say that we need to keep a watch. Yes, this candle has given an abrupt resistance at higher levels, 58,563, but I will still keep my eyes open on the daily chart and try to watch out what price action is visible to me over here. IT pack continues to underperform. The monthly time frame chart looks not that great. Weekly is already bearish, although we are now close to this support, which is at 34,217, which is just slightly lower than the current market price. Daily chart is already bearish. So if we close below that support, then you will see IT pack slipping down. But we need to sustain below the support, and this is an important support over here according to me. All right. We do also have an important resistance here, and we have an important support here. So I think it is a fight between bulls and the bears. Well, middle pack. Middle pack, I had been repeating that it is a sector which is outperforming consistently in my previous weekly sectoral analysis, and it was outperforming because this particular sector was not ready to correct. Any sector in a bearish market, when it is not ready to go down, it is a good bullish flag that something is right in the sector and probably things could improve. Although we did not have the confirmation, but at least we could see one thing, that the price was not ready to go down. And finally, if you check in the daily time frame chart, the price is trying to give a breakout. Yes, we have a couple of days candles closing above the trend line, but I think we need a little bit more close above this particular trend line, and especially if we close above this high, then it will be icing on the cake. We will be able to see some side of upside momentum. Infra pack. Infra pack, I think the weekly time frame chart is consolidating. We are near important supports over here. You can see we are consolidating in the weekly time frame charts. It's like the price action has been, since 5 weeks it has been in a range, and even in the daily time frame chart, if you check properly over here, we have been predominantly within this range. Within this range, the state of trend continues to remain bearish. It's not at all bullish, but we are also trading at this support. So I think the bearishness, in case if it wants to continue, we'll have to minimum, we have to break 88.50, close below it. Only then you will be able to see newer lows, fresh new lows in the infra pack. Okay. Otherwise, it will keep on consolidating. Pharma pack, I guess in the monthly time frame chart, things are much better. In the weekly time frame chart, I would say that it is consolidating. It is trying to, it's trying to prepare to trend. You know, majority of the times market prepares to trend, and 33 to 40% of the time market trends. So I think this is a preparation before the trend. Only thing is that in the daily time frame chart, it is supremely choppy. You can see a bullish rally, a sudden bearish fall, a pullback, again a correction. So not a very good time to trade the pharma pack, but keep your eyes open because the higher time frame chart is looking a bit better than the daily time frame chart. So we'll take the cues from the weekly time frame chart to probably take a view from the daily time frame chart. So we have to combine the both. And as of now, the daily time frame chart is not at all looking similar to the weekly. So we'll wait and then give it a shot. All right. Going ahead with the PSE sector, I think the monthly time frame chart is trying to hold on, but the momentum is slowly and steadily getting bearish. Weekly time frame chart predominantly looks bearish. Yes, we do have a week of pullback, but again at the daily time frame chart, if you can see, we have hit a important resistance zone, which is between 95.52 and 96.67. If you are able to surpass this zone, close above it, then things will improve. Otherwise, probably we could consolidate and then correct further. Realty pack, probably a sector which is bearish, just like IT. But recently we have been able to see a lot of drama in this sector, like up, down, up and down. In the last 4 weeks, you can see two candles which are bullish, then again one candle which is super bearish, then again intra week we made a supreme pullback, probably somewhere over here on 2nd September and 3rd September, somewhere over here. Sorry, the 1st, 2nd and the 3rd September, and then suddenly in the last 2 days we saw a sell-off. So overall the state of trend of the sector continues to remain bearish. Only thing is that it was extremely choppy, very difficult to trade, but the view remains bearish. And if it wants to continue, we need to close below 865, then you will be able to see some bearish candles on the downside. Now, India Defense. India Defense, I would not like to comment on the monthly time frame chart. We don't have that much of data. But in the weekly time frame chart, the state of trend is bearish. Even the displacement of these moving averages is bearish, and the important support is at 71.64, and which is much farther away from the current market price. So I think overall stands on the India defense sector as of now is bearish in the short term. Midcaps, I think they are consolidating. They're trying to hold on. They are trying to fall less in comparison to the large caps. And if you check over here, we can see very nicely that they are consolidating. They're trying to hold on, but they are certainly not bullish. All right. So I think as a trader, we need to be very, very careful if you're initiating trades in mid caps. And I think summing it up all, it's a market which is probably more sector specific and stock specific rather than having a blanket view on the entire market. Like if you just watch Nifty, you will be able to trade all the sectors in the same direction. No, it's not that. It's not that gun-go type of a market. Certainly not. And I've also specified 2 important levels which you can keep in your mind and add your own analysis to this. So it's basically predominantly, as I'm saying, that not a market where you can initiate too many trades. You need to be watchful. You need to be vigilant. And it's a time to protect your capital. It's a time to protect your money. Trade less and trade wisely. Thank you.